Hi, I'm Jim Mintert, Director of the Purdue Center for Commercial Agriculture. Thanks for joining us for an overview of the April 2019 Purdue CME Group Ag Economy Barometer survey. The Ag Economy Barometer dropped rather sharply this month to a reading of 115 compared to 133 a month ago, and that's one of the lowest barometer readings we've had since the fall of 2015. As you look at it, the decline in the barometer was driven both by a decline in producers' expectations for the future, as well as a decline in their perspective on current economic conditions on their farming operations. The index of current conditions fell 21 points to a reading of 99, and the index of future expectations fell 16 points to a reading of 123. One of the questions we posed on this month's survey was to ask producers about their expectations with respect to their farm's financial performance this year versus a year ago. And on this month's survey, 27% said that they expected their farm's financial performance to be worse than it was in 2018. When we asked that same question a year ago, just 19% expected their performance to be worse than it was in the prior year. And a similar decline with respect to the number of people that expected better than performance. And that was one of the drivers behind that weakening, both in current conditions and especially the future expectation index. We also asked producers whether or not now is a good time or a bad time to make large investments in their farming operation. And the percentage of producers that said it was a good time to make a large farm investment declined, and the percentage of producers that said it was a bad time to make large farm investments increased. And that combination drove that large farm investment index down rather sharply to a reading of 48 compared to 57 a month ago. And as you see on the chart, that's just the fifth time since we started collecting data in the fall of 2015 when that index has fallen below a reading of 50. We also asked producers about their expectations for farmland values looking out 12 months ahead. And for several months now, we've seen a larger percentage of farmers indicating they expect a decline in farmland values, and that was consistent again here in April, as 28% of the producers said that they expected lower farmland values in their community over the next 12 months versus 25% that responded that way a month ago. As you look at it, that suggests that the percentage of producers expecting lower farmland values is getting close to the levels we observed late last summer and early last fall when producers' perspective was relatively negative. Producers continue to have a lot of concerns about the trade disputes, especially the trade dispute with China. So we've been asking whether or not they expect to see the trade dispute with China to ultimately be resolved in a way that's beneficial to U.S. agriculture. There wasn't a big change in the results this month versus a month earlier, but there was a small deterioration in producers' perspective. 71% of the producers told us this month that they expect that trade dispute to be resolved favorably for U.S. agriculture. A month earlier, it was 77%. However, when we followed up and said, do you think it's likely or unlikely that the trade dispute will be settled by July 1, focusing on soybeans this time, there was a big shift in attitudes relative to a month earlier. 72% of the producers told us that they thought it was unlikely that the trade dispute would be resolved by July 1, whereas a month earlier, just 55% felt that way. So a significant deterioration in the perspective there. That kind of wraps up our overview of the Purdue Ag Economy Barometer survey for this month. Check the website for more details. And of course, next month's report will be released on June 4th when we'll have a new video up on the website. Thanks for joining us. On behalf of the Purdue Center for Commercial Agriculture, I'm Jim Mintert.